Welcome back to Smart Money. This is our New Year episode where we're talking about the 10 investment lessons that you need, especially in a volatile year like this one, for 2023. We have Basant Maheshwari, author and portfolio manager at Basant Maheshwari Wealth Advisors, and he has very helpfully talked about, some investment lessons. So let's move on. Basant, the next investment lesson that you speak about is every stock has its day. And if we go, you just take an example of the last year, I think the day and the year belong to PSU banks, right? After what, over a decade, they started to perform. But how do you decide when the party is over?
See, I think I have a different theory on this. About 30 years back, when we started investing, when Hindustan Motors, the company is shut down, it used to make ambassador cars. Yeah. When it used to rally, we used to say the bull market is nearing an end. 10 years back, when Suzlon and Unitech and HCC and Nagarjuna and IVRCL used to rally, we used to say maybe the market has topped out. I don't know, I don't want to put my neck out, but the way these PSU banks were going up, none of the guests on your channel could actually defend them fundamentally. All they said was they haven't gone up for 5 years, so suddenly they are going up. And all these second line, third line PSU stocks that were going up, I don't know whether they had a message for us saying that right now you guys are making money, but just be careful, this bull market is wanting to take a breather now.
Are you saying that because you missed out on the rally?
Of course I missed out. Of course I missed out. But then...
Is it a case of sour grapes then?
Obviously it is. But then when stocks like these actually go up, where you cannot fundamentally justify them, that is happening there. And say with PSU banks also, even if you had them in your portfolio, there would have been 3, 4, 5%, not enough to move the entire portfolio. So, but every stock, if you survive the game, if you hold it, you will make money. So PSU bank has to be distinguished, and SBI is not a normal PSU bank. That's a class A, a category A bank. But the second line and the third line banks, the third line stocks, when they start moving up, it tells you that there is a danger level somewhere.
And it's okay to miss out on the rally, right? I mean, there's so many fish out there in the sea. You don't have to eat every single one of them, right? Got that. Let's move on. Popularity loses. Now, what do you mean by this? You talk about how fancied high PE stocks held by large funds didn't outperform HDFC Twins, paint companies, strong brand with moats. It's interesting, right? Because these are the companies that are performing well on the earnings front, but are not doing anything in the stock market.
Say, if you have an 80 PE stock with a 15% growth rate, right? And the stock doesn't do anything, it takes 7 years for the PE to come down to 30. So from 80 PE, you cannot justify it at 70, 60, 50, 40. Moment it comes to 30 PE, then you start justifying it. So there are some stocks, they keep moving till they don't keep moving. These are one of them. And when I say popularity loses, I mean, investing is not as easy as a beauty contest. In a beauty contest, popularity wins. But in investing, if a stock is popular, and everybody knows about it, then it's very difficult to make money out of it because here the unpopular stock wins. So what are the big multi-bagger themes that actually make money for people? Say if I want to buy 1,000 shares of a stock and I have to bid the price up by 1%, it means it's unpopular. So when I used to buy Page about 10, 15 years back, for me to buy 500 shares or 1,000 shares, I had to take the price up by 3, 4%. So when a stock is very, very illiquid, it's telling you it's not popular. When a stock is very liquid, it tells you that it's popular.
So what are the unpopular stocks? I mean, these are not recommendations, of course, but what are the unpopular stocks which are delivering on growth, which have valuation upside, but are just sort of undiscovered by the market?
No, but I can take you back in history. So there was a stock called Symphony. I didn't own it. So you had to take the price up by 10% to buy some decent quantity of that stock. So if you find a stock like that, if it's a consumer business, if it's growing at 30% and your starting point has to be 10, 20, 30 PE. If you start with an 80 PE, it's like scoring 22 runs in a final T20 over. It doesn't happen. It's very difficult.
Okay, and finally, you have a couple of more themes. Let's run through them very quickly because we don't have too much time. Consensus rarely works because everyone cannot be rich at the same time.
Right. So let's take the example
again. Give us an example.
So let's take the example again. Suppose let's go back into the past and say we are at 2010 and everyone here owns the stock Symphony. I can talk about it because it's not a recommendation. So at that time it was supposed to be one of the good stocks to own. And if everyone owns Symphony or everyone owns Titan and the price doubles up, where is the next buyer going to come from? Because everyone has already bought the stock. So the consensus never wins because at every price point, even as the stock keeps moving up, you need a new set of buyers to come in. And if all the buyers have already bought the stock, and that's the problem, Sonia, when you tell me to talk about stocks on TV, and if I talk about a stock on TV, I naturally tell everyone to buy it. And if everyone's bought the stock, and let's assume the stock goes up 50%, where are you going to get the next set of buyers from? So you want to own your stock, not talk too much about it, and then hold on to them.
Okay, information is democratized, causing volatility. Now, an overdose of information in today's day is a given, right?
Right.
WhatsApp, TV, social media, Telegram. How do you cut the noise?
So the only way to cut the noise is to extend your holding period.
Okay.
Because if you have a smaller holding period, the noise is going to cut you both ways. It's going to go up, it's going to come down. So from June 2022 to October 2022, in 3-4 months, the index rallied at least 3,000 points. And no one knew why it's going up. And index also fell like that. So the problem with this kind of information is everyone gets all the information within a period of say 30 minutes or 20 minutes, and everyone looks at the same exit door and everyone wants to get in through the same entry door. And that's the problem with information. But this information is there for sure. It cannot go away now, it can only increase. So the only way to get out of this is to extend your holding period.
Okay, extend your holding period. That's the only way you can cut the noise. Got that. Money can be made by short-term trading, but wealth creation needs long-term EPS growth. I think that's a given, right? I mean, that's kind of something that everyone knows about.
Everyone knows about, but in this kind of an environment, even if your company is going to grow EPS by, say, 25% every year, and there is so much of noise all around, you would want to sell the stock and say, I will buy it back later when there is clarity. So when there is clarity, आपको भाव भी clarity के देने पड़ेंगे. You will not be invited for this party by a prior invitation, and that is why if you are sure about your company that it's going to grow earnings, let the other guy make some extra money by trading. Let the entire world make money, but you have to stick to what you know. And if your company delivers on earnings, you will get your price back.
Okay, now that the lessons are over, before we end the show, I know you don't want to talk about stocks, but give us some themes. What do you think the big trend, the big theme will be in 2023?
So the big theme, the trigger for all the themes is the Fed interest rate. If the Fed sticks to its higher for longer policy, 2023 is going to be a damp wicket for you to bat on. It's going to be very difficult. You have to just think of surviving. But my sense is, and the general consensus is, that the Fed might want to lower the rates, and the moment the Fed decides on lowering rates, there'll be an all-round rally, starting from the consumer discretionary, starting from IT services in India, starting from maybe a cement companies, because their input costs will go down. So, for example, if you want to buy a stock, so then you will be confused whether should I buy Dalmia Cement or an Ultratech or a Shree Cement. So my bet would be to buy an Ultratech, not a recommendation. I will tell you why. Because Ultratech is more widely bought. When the foreigners come into India, they would like to pick up Ultratech. So you would be confused between NBFC and
stocks,
blue chip stocks. They rally the first and they rally the fastest. So these are the kind of companies you should normally bet on, because when the rally starts again, and it is going to rally. So this is the only game, Sonia, where you win by surviving. The other games, whether it's football or hockey or cricket or maybe a casino, you don't win by surviving. You win only by winning.
Yeah.
So this stock market is a place where you can win by just surviving. So people should think of surviving with their DMATs loaded. You cannot empty your DMAT. So that means you've left the game. If you lose, if you leave the ground, how can you win the game?
Okay, this show was truly dripping with a lot of investment advice and, sane advice at that. Basant, thanks a lot for joining in. Hope you have a great 2023.
Thank you.
Hope you don't just have to survive, but you make a lot of money this year.
And I would like to add, it's easier for me to say, but even we get swayed by prices on the screen. But then you hold yourself back and you say, I have to survive. That's it.
Okay.
This too shall pass.
As long as you continue watching the screen, I'm fine with anything. Thanks a lot for joining in. Really entertaining infotainment, as we call it. A lot of information, a lot of entertainment. Thanks a lot. With that, it's curtains down on Smart Money. Thanks a lot for watching.